What's up everybody, how we doing? My name is TradeX, this is my trading den, and today we're going to do the recap of today's session, which is Tuesday the 20th, okay? And so guys, if you do like this video at the end, do consider smashing like and subscribe. It does the channel well good, and also helps other traders like yourself view this content, right? So we are going to jump straight into the meat potatoes and get into the good stuff, because we've got a lot of good content to get through today, alright? And where I want to start is here at 6:43, and where were we at 6:43? Why was this an amazing place to go short? This was an amazing place to go short because we've got to reference that daily wicks of gaps, okay? So it was this green candle that was expanding away, but we know wicks are gaps, and we've got quadrants. So we've got 25%, 50%, 75% of a wick, okay? Now, if we draw a line across 75% of the daily wick, and this was in the London session, where did it hit to a tick? Bingo! And then you go short here, target the lows. That is the simplest 10 handles you'll see. Amazing trade if you got it. Anyway, my entire draw, as if you've been watching my videos from yesterday and the day before that, you would have known that my draw has always been this SIBI. Why? Because we have FOMC on Wednesday, and I believe they wanted to put us in no man's land, so we didn't know which price they were going to move price on for FOMC, because FOMC will have a large price swing. So my draw has always been up to this SIBI, and so you can go back and check my videos from Monday and also Friday and also Sunday, where I knew that this was going to be the draw on liquidity. And funny enough, Tuesday close, they have placed us inside that SIBI. But in the open session, right, well, I knew that price was drawing higher. I didn't believe it had a reason to move lower because it had no reason to, right? If we look at what had happened, we had these, the accumulation and these leg one down, reaccumulation, consolidation, leg two, and then we had the SMR, we have manipulation and reaccumulation, and some more manipulation and accumulation, and we're quite clearly now in a distribution phase, right? So it has no reason to come back down. It's moving through to a distribution phase. It's moving through to liquidity. Where was the liquidity? Above these old highs was the reclaimed order block on leg two of the sell side of the curve, okay? So there's bound to be a whole host of liquidity, buy side liquidity, sat above that reclaimed order block, which was above this high, okay? So we know that price is going to draw up into that to go and sell all of the positions that were bought down here into all of that liquidity. So that is what framed my bias long. So the whole context of this morning for me was long, and I was looking for entries long. Now, what I was therefore looking for was lines in the sand, guys. Lines in the sand. And so if we know our PD matrix, what do we have? We know that the equilibrium point above that is the mitigation block. Then the next is a breaker block. So as soon as price got above this breaker block, I saw this as a line in the sand. Okay, line in the sand. And you guys can head over to Twitter, or you can jump into Red Pill, where you can see all my trades. But I didn't take anything here. It was too choppy for me. I stayed out. And I also was chilling here. Now, this is the trade I took today, and so you can head over to my Twitter and check it out if you want, but I caught this entire range, top ticked and bottom ticked it, okay? And why did I do that? Why did I get that? So, as you know, my price draw was this SIBI, and we hadn't got up to it. We also had this fair value gap on the daily, and I was anticipating us to run higher into it. So I wanted to see us run into consequential encroachment of that daily wick, okay? Extend higher into it. If we also have a quick look at the new weekly opening gap chart, I also wanted us to move slightly higher off the morning session to a point which satisfied the conditions for me to go short. Okay, so I wanted it to see just below a 0.5 standard deviation from RTH open. That's not the topic of conversation today, because that's something slightly more technical. But we could have taken on the premise that it was literally CE of the daily gap, and also we had, if we look at this range on the hourly, from the high to the low. What was that level again at 32? It was the 79% level, right? Bang on the 79% level of the OT zone, right? So we were right up there as well. So we have multiple reasons as to why price would go short there. All right. Well, I lost all my stuff. Look. So if we go there, put my cursor across 70 at this line here. is at 79% of this OT zone, right? That was confluence number one. Also CE of this daily fair value gap. That was why I shorted here. And if you don't believe me, jump into Twitter, jump into Red Pill and you'll see it. And we took this short. I took 5 handles here and then I was waiting for the 2022 model to form. What did we get? Break market structure, price ran up into that fair value gap. What did I do? Jump in? Jumped in with 3 contracts. What was I targeting? Guys, if price has swept the buy side or the sell side, what is it running for? It's running for a breaker. So where was the nearest breaker? The old breaker down here. What did price run into? Bingo, right? And now, guys, we need to know that what is our PD matrix? So what is below a breaker if price is going to run down into a deeper discount? What is the line in the sand, as I always call it? The mitigation block. So what happened when we ran into the mitigation block? Price bounced off it various times, right? Various times, okay? All of this is showing that this line in the sand is strong, right? It's showing that this line in the sand is strong. And so ultimately price consolidated during lunch, moved higher, took these relatively equal lows, punched back up into that range that was in the AM session, dumped again before we had this spooling price action. And what was price ultimately reaching for? It was reaching for that SIBI up on the hourly, which I called days ago would be where they left us ahead of FOMC. Why? Because they want us to be in no man's land. So when it comes to FOMC, they don't know whether to go long. We don't know whether to go long or short. And so that's bound to cause max pain to the market. All right, guys, that's going to be absolutely everything today. As always, trade safe, trade smart. And if you found value, please do consider smashing a like. I do put a lot of value into these videos, so it would mean the world to me and does the channel a world of good. So until next time, guys, trade safe, trade smart, and I'll see you soon. Bye now.